Hello, everybody. Now, before I get started, this is not financial advice. Do your own research and make your own decisions about how to trade, how to invest. This is just my own personal opinion and observation of the market. Now, before I get started, if you guys can do me a huge solid favor, press the like, smash the screen, kick the computer, whatever that is that YouTube wants you to do, ring the bell. I would really appreciate it. I'm trying to build up my community of like minded people who are interested in technical analysis. And yeah, that's it. With that in mind, let's get into the charts. Now, I'm going to try and focus on the foundation of a lot of support and resistance lines that I've been talking about. And it seems that there's a lot of confusion about why I forecast certain areas to be more problematic, less problematic. I will not be revealing the entire system. I'll be just showing the foundational kind of structure. So here we are on the SPX, the S&P 500, and I will switch to the weekly chart, and I'm gonna try and zoom out as much as I can. Now you'll see the reason for that. The first thing I want to do is grab my Fibonacci retracement tool, which is right here, bring it to the absolute top where we had the peak at 2021, and bring it right here to the bottom to 2009. Now there's a good reason for it. Not gonna break it down right now, but there is a good reason for it. Now, immediately you can actually determine that the market respected that. And you can determine that simply by seeing that from the first level, right here, every time the price action got close to the terminal level of each of these lanes, these levels, these channels, okay, you can see what I call an entanglement, just like a fishing line can get entangled within itself, right? Just right here. You can recognize that instead of going through smoothly, it got entangled, meaning it was being tested. This is what I refer to when I say the price action is testing a certain level. Now, the more we zoom in, the more we can recognize the testing. Okay, and again, the closer we will zoom in on the time frames, meaning seeing individual candlesticks, every time we will see this area being tested right here on the weekly, I assure you that was far more often on all the smaller time scales. Okay, so let's just drop in so I can show you a little bit closer what I mean. Oh, of course, well, TradingView is gonna cause problems now. By the way, if we're already talking about TradingView right here, this is TradingView, the platform of my choice. Although right now it's kind of screwing with me, pardon my French. I actually, pardon me, really like this platform. It's absolutely great for charting and technical analysis, and actually it provides a lot of information other than just useful charting. And well, it's an overall really good tool for investors, traders, everybody alike. Yeah, although right now is obviously it is screwing with me. But you know what? Let's just focus then on another time frame, just on another level. Okay, so right here we're on the 4-hour chart, and you can see again the market, instead of going through smoothly, although seemingly at first it did so, but then you can say, surprise, surprise, look, perfectly aligned. This is how the market crosses over, basically tests a certain level, gets entangled with it. Very much more often to see the price action reach from below, test it multiple times, attempting to break through. Sometimes you can even see little breakouts like this, failing through again. This is actually very much, I would say, a double bottom bear trap. You can recognize it right here. you have this structure. Low, highs, lower low, and actually exit. Okay? So, yeah, ignore this. Wrong tool, but you get the idea. Very similar to what we've experienced just recently. And by the way, if you followed my previous videos, you would have been able to recognize there that I was correct on my assumption, which actually I gave it very low likelihood of this little break that we had. Okay, this little dip. I did not expect that to happen the way it did. To be as low as it is, but well, no, actually, is this it? No, well, we'll see in a minute. Once I'm gonna lay out all the important lines, you will see. So the idea here is to see the big picture. Why is the big picture so important? Because if you misunderstand the overall market and the big picture, your understanding and estimates of what is going on in the short and medium term will be either wrong or very skewed. Okay, so again, right here is another example, very clear example of the market recognizing and caring for these levels. Okay, in fact, the most important level, usually, again, on the retracement, is actually this golden pocket. So anything and everything that is located between 3,922.51, if we want to be precise, to 3,226.63. Okay, but this is the big, the longer term trend. Now, these lines are obviously important, but let me show you some other lines, some other resistance and support lines that eventually form sort of a grid that the market is forced to move between. Okay, now the first thing I want to do here is create our trend line that was just recently broken, the one that I was talking about for the last couple of months. Well, not more couple, well, more than couple. But then, so what I do here is I stretch an extended line from this point right here, from the absolute peak, 4,808, it seems, at least according to this number right here. And this point, which was the first time, okay, on the weekly chart, we saw the market find a resistance. And if we look continuing forward on, we know, well, now we already know that this resistance was obviously respected by the market. Now, my prediction was, I can actually bring us to the other chart. This is, if you remember this chart from the previous video, and because I was MIA for so long, you can see that exactly where I've expected the market has broken through the trend. It started, you see exactly what I previously mentioned. The market tested this resistance right here. It's the same line. Again, it just looks maybe slightly differently, but it is the same line, I assure you. Absolute peak and the first resistance that we've met. Now, going onwards, if you remember the red bubble, this is where I expected the market to break through. I have expected the market to retain a little bit of more of a price action above the resistance just for a little while, testing it. But then again, even this price action within itself is more than sufficient to show me that we actually have respected the trend right here, this wedge that we've been moving into, okay? And we broke out of, taking this dip that actually, if you watch the previous video, I've mentioned that potentially we're going to have a bit of a dip right here. I've mentioned this entire thing that it potentially can happen. I also mentioned that I see it as less likely, okay? If you remember, my expectation was a bit different. This purple line, actually, I moved it. It was a bit different. I've expected to have a bit of an attempt first right there. It was slightly, again, I've changed it since to just kind of adjust and show. If you listen to what I've said on the previous video, I said these are potential pathways. They are there just to emphasize the general idea. Okay, I knew that we're gonna have this interaction between the price action and this resistance and the support. Okay, and I will show you a little interesting tidbit about this bottom support in a second. Now, since we've again tested this resistance line and broken out successfully, as I've expected that this will be the first attempt, and throughout the process we will break out, and finally that resistance that was posing as a moat we have to cross all along since the COVID peak has been broken. This is a very good, significant sign. Now, does that mean from here on out we're out, to the moon? No, that's not how it works. In fact, I emphasized that multiple levels here will be tested. If we're talking about, for example, August 2022 highs, which are roughly the same levels right here, and I will, by the way, reveal in a second why we have stopped, particularly where we have, okay? And mainly the reason being, really, to simplify things, is a conjunction of multiple elements. If it is historic resistances, Fibonacci levels, and yes, gaps. I know you're surprised now. Which gap am I talking about? No? Well, guys, we actually had a gap right here. You can see it on this chart. Pardon me for the messy chart. This is my dirty chart. This is where I have a lot of other elements that are playing a role. You maybe even remember this chart. It's the one that includes a lot of intraday supports and resistances and psychological supports and whatnot. In reality, guys, I'll tell you that a lot of these things are derived from Fibonacci retracement levels that you and I do not lay out simply, okay? And unlike us, the bots see and remember everything. They do not forget a single thing. For example, I'm going to show you why the price action right before the weekend has chosen this particular exact level to start breaking down and reversing. Well, there is this blue line and green territory, right? This box seemingly above this point. Now, what is it stemming from? Why do I have some lines over here from the get-go? And maybe I'm cheating. I just laid it out after the market has stopped. Now, let me show you what this is derived from. We go back, and we go back, and we go back, and we go back, until we find a gap that was actually created on August 2022. And yes, you see correctly, this gap was created from roughly right about there, to be really precise, to right here. You can see it's absolutely accurate. Now let me lock it in, and well, and it never been closed. By the way, there was an attempt, but it was never been closed. Now, going into today, surprise, surprise, we have hit that exact level. Another thing that you don't know, if you look at this chart, for example, which is slightly different, this is the same SPX, but a continuous SPX, okay? It's traded 23 hours, 5 days a week. It's the continuous contract, is the CFD derivative of the SPX. And if we look right here at the level that we have stopped this weekend, right before we got into the weekend, which level is that? That is a terminal level of a previous Fibonacci retracement. But to show you how accurate and how important these lines are, I will show you where this fib has been stemming from, just to show you how far away and how accurate it actually is. And you can definitely recognize the market respects it. And this was one of the other reasons why the market has stopped. And yes, both of these, this contract and this asset ticker and the regular SPX, they move together. Other than the CFD variant, the continuous contract, essentially continues, and this one, when trading opens up in the US, in the New York Stock Exchange, this continues from where this one is actively trading at, meaning at this very moment, pre-market, we're at 4,100. And again, by the way, no surprise, the market is testing 4,100. Yes, it would be very surprising if we would test it only a single time, okay, and not retest it. The market likes to retest levels over and over again until there is a final consensus of everybody agreeing that these are the levels that the market is satisfied with, and only then we can start working out from there. So if you pay attention, the market respected that level. But let me show you, where is it derived from. What do I mean derived from? Meaning how long ago I've set up the fib that allowed me to see it all together, right? So let me show you right here. To show it, I just press this button, and you see this line. It appears right there. Let me zoom in a little bit closer. Okay, so I've basically measured a single candlestick, a single day, right here on September 28th, 2022. And just this one line, has been respected by the market all along. You can recognize it multiple times, like for example right here. And again, remember, those are big candlesticks, meaning they include the whole price action of the entire day. That means that throughout the day, if we zoom in on the minute chart, you will see it maybe happening 10 times during that single day. So altogether, we're talking here about hundreds of times hitting the exact same level. And what do we find onwards? Testing it again. So as you see, the market likes to test levels. This is when we do sideways action. Okay, this is when we move sideways for some period of time. Hence, testing and approving certain levels, and then we can move onwards if the market is bullish. Now, I've been saying that the market has been bullish all along. Now, let's go back to the empty chart, the clean one that I've started from the get-go. Let me show you some other interesting lines that can be formed right here. Now, when you put in support and resistance lines, I would recommend ignoring anomalies. Meaning, if you recognize that the market hits certain levels multiple times, okay, connect those and ignore the exception elements. What do I mean? I'm going to give you an example right here. So right here, as you know, I've been saying we have a wedge, right? And I've been ignoring this anomalous part, this excessive part, which was the double bottom bear trap. Okay, if you go to the previous videos, you can find explanations about that. Now let me prove it to you. And let me prove to you more so why it's so important not to delete any support and resistance lines, even if it takes years for them to become what you would consider irrelevant. Okay, so here I'm going to take these bottoms, okay, and there is a big argument about whether you should connect only the bodies or the wicks of the candlesticks. But in this instance, I'm going to connect the bottoms, okay, and ignore the overall anomalous wave. Now, all I'm going to do is connect these 2 points. Now, seemingly, the market also respected it right here, meaning it went below. Right here, you can see the market actually testing it and actually having some form of respect and knowing that it's there. Although, again, market conditions were very painful, hence we actually saw a bit of an excessive drop. Okay, again, there are other reasons for it. Remember, in the market, nothing ever happens due to a single reason. Usually, it's a conjunction of a multitude of elements, and the more elements that come into play at a certain level, the stronger the current support or resistance or overall level will be. Now let me show you a trick. You guys saw, I just connected these 2 points. That's it, you can see it. This and this. Let me lock it in so it will not move by accident. Now let's see. I mean, you're gonna say, well, Greg, how do you know that this line has any importance at all? It seemingly just hit here, we'll say once, twice, 3 times. I mean, how important is it? Now, guys, let me show you that this line has always been there, really. And we've been following and respecting it and testing it over and over and over and over and over again. Well, you get the idea. In fact, it's been there since around 2016-ish, if I recall correctly. Yeah. Well, let's see. Yeah, roughly around that time. In reality, it's not a singular diagonal line. You can see the price action is dropping below, going above. If anything, I would say that this is the maiden level, or at least one of them. In fact, I would recommend always to be very attentive to know that these lines are, especially the maiden area, it's not a line, but rather a channel. What do I mean? If I'm going to take, okay, and I'm going to make another line just like this one, and it's going to be absolutely parallel. I'm going to try to make it as parallel as possible, right? And you'll see something interesting happening right here. I'm going to try to make basically a parallel line. You can recognize, pardon me, there we go. This is almost perfect. And you see, I'm not making up anything here. I'm not, I'm literally connecting 2 points that we can see, well, even with the naked eye, quite obviously that there is almost an invisible support right here or something. Now, this, what you have right here, is a little bit more close to what the market really cares about. In fact, you can see how very often the market literally gets entangled, again using this term, within the level itself, okay, within the channel itself. Again, and we're talking here from 2016, guys. Look here at the bottom, you can see the dates. In fact, I would argue that these channels form continuously and create a form of a grid. In fact, there are a multitude. There are a lot of them. There are almost like lanes on a road. Okay. Now the market cannot really move sideways in times of uncertainty, in times of testing certain technical levels. And yes, technical analysis is very important because the vast majority of the liquidity of the market is actually being moved and used by bots that serve the financial institutions. And believe it or not, bots, even the AI structured ones, are not, you do not convey a philosophical, psychological understanding of human beings. You simply give it raw numbers. And by seeing the action that we take driven by the sentiment we have, they translate that into action. Just like in architecture, form follows function, follows form. It's like a cyclical process. Same thing here. Fundamentals drive technicals, technicals drive fundamentals, and onwards. Now, the bots actually drive the vast majority of the liquidity. So I would say, again, technicals are important because technicals are the raw numbers that drive the bots. So as you can see right here, this little level, and I will say again, there is a multitude of diagonal levels, lanes, channels, if you will, that the market follows and respects. And as you can see, this one little channel that was created just right here is actually far longer been respected by the market than it seems on the first glance. All right. So these were part of how I knew we're gonna follow into the switch, how it's all gonna play out. There are other momentum indicators that I use. There are plenty of tools that I use. Again, to know all about that, I would highly recommend going to Tom Nash's Discord community, his YouTube channel. I will post a link down in the comments below. Tom Nash is a close friend of mine and a financial expert that I personally highly respect. Very knowledgeable person, very wise. And this is where I mainly, first of all, I maybe again, I've said it before. Maybe you can say I'm biased, but I love that community a lot. I serve there as a admin. I help to build this community and manage it. But even with these things in mind, I can honestly tell you it's a unique community for investors, traders, beginners, experts, everybody alike. It's a great community. We talk about the overall market, all possible assets that you can think about. If it's everything and anything ranging from crypto to forex to stocks to ETFs to anything and everything, literally. Highly recommend the community. And there I do a little bit more of a breakdown to why I work around certain levels and how I determine where I'm gonna buy in, sell, withhold, whatever I'm going to do. So you're not seeing the whole toolkit here, but you're seeing part of the fundamental process. Now, another thing I'll recommend to do is, which by the way I really wanted to steer away from, not doing it simply because, well, the COVID peak and the whole wave that we've created there could be considered anomalous to some extent, but because the bots and, well, they just simply the bots do not care. Okay, they see the raw numbers that are there. Pardon me. So I would still, although I used to recommend against it, now I will honestly admit that you probably should set another fib retracement structure right here, including the entire wave, top to bottom. Okay, the entire trend. Sorry for that. The magnetizing tool is making it difficult. There we go. Perfect. And as you can see, some of the lines will not be aligned to one another. And if we look in closely, for example, right here, we create these narrow channels, these testing areas as well. And now you guys can see, if you've been part of that community, you will know why since September 2022, I've been saying we are moving in a sideways channel. We can see right here, okay, that some of these lines combined together, you see, for example, one is derived from the newer Fibonacci retracement, and the other one is from the longer term one. So they inevitably create this top that is derived from the older one and bottom that is derived from the newer one. And you can obviously see that the market perfectly aligns with them. So as you can understand, it's not a single element that makes or drives the price action. The anomalies or the exceptional moments that we veer off of a trend, for example, you can pretty easily recognize it here. The trend was, here is the bottom, here is the top, but what is this pocket? These pockets are created due to fundamental noise, basically fundamental events, reports, whatever that is that happens in the real world. The Fed speaking, JP can cause this sort of a thing as well. Interest rate hikes, a lot of variables that can cause these sort of things. But if you can see, the trend breaks for a little while, corrects, and continues, almost as if this was just a temporary, well, deviation, okay? A pocket, this is, if you will. But overall, the market retained its general trend and kept on going upwards. So now we can see certain elements that are coming into play. Now, so what are my expectations for the future for the SPX? I am still very bullish. I will make more videos soon. Again, sorry guys to leave you on a cliffhanger, if you will. It's not exactly a cliffhanger, but I am still bullish. I still do expect the market to do what it is more likely to do, okay? From my experience, and yes, I've worked in the industry for a decade basically. And from my experience, I can tell you that the market will attempt to match previous highs. To say that that will happen tomorrow or even in next or this quarter, no. First of all, we're gonna have to break a lot of resistance levels, and again, there are plenty. You do not see all of them right now. You just saw what I focused on, but there are plenty of resistance levels that will have to be broken before we can finally match this high, this 4,800 high. Does that mean we're gonna hit it perfectly? Does that mean we're gonna hit it this year? I'm gonna at this point say that there is likelihood we actually will see towards Q4. And again, this is a very rough sketch assessment that might change. Might towards Q4 see levels that are close to previous highs, to those 4,800. To tell you that we're gonna finish the year above that, very unlikely. In fact, it's far more likely for the market when actually achieving those highs to break down again. But I think I will keep that for other videos, just not to keep it as simple as possible. I think I've rambled forever and ever. Guys, I hope you like this video. Please post all your questions and comments below. And again, smash the like, subscribe, do all that wonderful stuff that YouTube wants. I really am trying to build a like-minded community. I really appreciate it. And yeah, I'll see you on the next video.